Did you know that the home you have lived in and loved for decades could suddenly become the reason you lose over £2,000 of your state pension this year? A quiet, almost entirely hidden rule change has just been signed off behind closed doors, and if you are a homeowner over the age of 60, your financial security is directly in the crosshairs. Before we uncover exactly how this trap works and what you must do to protect your money today, please take just 1 second to hit the like button, subscribe to the channel, and share this video with a friend. Your support is the only reason we can keep digging through government documents to bring you these vital warnings before it is too late. Please listen to me very carefully right now. The Department for Work and Pensions and the Treasury have just overseen a massive shift in the rules that govern how much you pay to live in your own home. This is about your council tax. But this is not the usual small increase you see every spring. This is a complete rewriting of the rule book that allows local councils across England and Wales to automatically force your property into a much higher tax band. And the worst part is that they are doing it without ever sending a valuer to look at your house. This new system takes full effect at the end of June. That means we have only a matter of days left before the trap snaps shut. The government has handed local authorities the power to trigger an automatic recalculation of your council tax band based on 3 specific personal situations. If you fall into just one of these 3 categories, your council tax bill could skyrocket. And because these new rules allow councils to combine these triggers, the absolute worst-case scenario could see your annual bill increase by up to £2,150. This is money that will be pulled directly out of your state pension every single month for the rest of the year. Once the automatic trigger fires at the end of June, the local council will process thousands of these changes in massive batches. Once that happens, your chances of fighting the decision and getting your original band back will drop to almost zero. The machinery of local government is incredibly slow to fix mistakes, but it is brutally fast when it comes to taking your money. The good news, and the reason I am speaking to you right now, is that you can stop this. All 3 of these dangerous situations can be identified from the comfort of your own home. You can check your own status, and in almost every single case, you can legally block the council from raising your band. But you only have the next 2 to 3 weeks to take action. I am going to explain everything to you in plain, simple English. I will walk you through the history of how this happened, explain the 3 exact situations the council is looking for, and then I will give you the precise phone number to call and the exact words you need to say to the operator to protect your home. To understand why this massive attack on pensioner wealth is happening right now in June of 2026, we have to look at what has been going on quietly in the Treasury since the autumn of last year. You already know that local councils up and down the country are running out of money. The cost of social care is exploding, local services are stretched to the breaking point, and central government funding has practically dried up. Local councils have been begging the Treasury for a way to raise more money, but politicians know that raising the headline rate of council tax makes people incredibly angry. It loses votes. So instead of a public tax hike, the Treasury came up with a stealth tax. They spent months developing a loophole that allows councils to selectively target certain homeowners. And the target they settled on was older people who have lived in their properties for a very long time. They realized that the current council tax system is built on an ancient, crumbling foundation. For the vast majority of pensioners in this country, the council tax band attached to your house was set way back in the early 1990s. When the old community charge was scrapped, the government had to quickly value every single property in the country to launch the new council tax system in 1993. The valuations they used were based on what they guessed your property was worth in 1991. Let me repeat that. Your current tax bill is based on a guess from over 35 years ago. It was a rushed job. Valuers literally drove down streets in their cars, looking out the window, and assigned bands to houses without ever stepping through the front door. Because of this chaotic process, millions of homes were put into the wrong band from day one. Some were too high, and some were too low. But for 3 decades, everyone just accepted it. The band stayed frozen in time. Now the Treasury is using this ancient history against you. The new rule states that councils no longer need to do a formal, expensive revaluation of your street to move you up a band. Instead, they are allowed to look at your personal circumstances. They are allowed to look at how your life has changed since 1991. If your life matches one of three specific triggers, the council is legally allowed to presume that your house is in the wrong band, and they can automatically move you up one or two levels. They do not need proof, they only need the presumption. The financial damage this will cause to a normal pensioner is staggering. Moving up just one single band is a devastating blow when you are living on a fixed income. For example, if the council decides to move your home from Band C to Band D, that simple change on a computer screen will add roughly £450 to your annual bill. If they move you from Band D to Band E, you are looking at an extra £600 a year. And if they shift you from Band E to Band F, your bill could increase by over £850. If you are extremely unlucky and the council applies two of the three triggers to your home at the same time, you could be moved up two bands at once. That is how we reach the nightmare scenario of an extra £2,150 disappearing from your pension over the next 12 months. This monumental shift in taxation has barely been mentioned in the national newspapers. It was intentionally buried. The Treasury published the authorization for this as a tiny appendix at the back of a massive, boring report on local government funding. They knew that journalists rarely read that far down. They also knew that the reality of this rule change will remain entirely invisible to the public until the new, aggressively inflated council tax bills actually drop onto pensioner doormats in the middle of July. By then it will be far too late for most people to do anything but pay up. The absolute final deadline for this to become permanent across every local authority in England and Wales is the 30th of June. We are going to fight back. Let us break down the first of the three situations the council is hunting for. This first trigger affects the largest number of older people across the entire country. I call it the mortgage-free penalty. If you have worked hard your entire life, paid off your mortgage, and your property is now registered entirely in your own name with no bank attached to it, you are the prime target. Most pensioner homeowners achieved this incredible milestone 10 or 20 years ago. You celebrated the day you made your final payment. You thought your home was finally yours. But the government sees your achievement differently. The new Treasury rule is built on a very specific, ruthless assumption. The government believes that properties held without a mortgage for a long period of time have increased in value much faster than properties that are constantly being bought and sold with new mortgages. They look at your home and say that the band you were given in 1991 is totally irrelevant today. They assume that because you have not had a bank value your house recently for a loan, your property is sitting in a tax band that is far too low. The new rule grants the council the power to act on this belief alone. If your home has been officially mortgage-free for more than 15 years, the council is legally allowed to presume you are in a tax band that is one level below where you should be, without sending a letter. Without knocking on your door, and without asking for a single shred of evidence, they can simply move you up to the next tax bracket. Think about what this actually means for your daily life. An extra £600 a year equals roughly £50 a month. If you are relying on a full state pension of around £900 a month, this single stealth tax will instantly wipe out over 5% of your total monthly income. And that money is taken from you before you have even paid for your electricity, your heating, your food, or your water. We have just covered the massive threat facing anyone who has paid off their mortgage, and there is so much more you need to know to survive this financial assault. If you are finding this deep dive clear and helpful, I would be incredibly grateful if you could pause for just a split second to leave a comment down below and hit the subscribe button. Doing so tells the YouTube system that this information is urgently important, which helps us push this warning out to thousands of other vulnerable pensioners before the final June deadline destroys their budgets. The action you must take right now, today, if you have been mortgage-free for more than 15 years, is very straightforward. You need to pick up the phone in the next 2 weeks and ring your local council tax department. You must ask them to confirm your current tax band, the exact date your band was last reviewed, and most importantly, you must ask if your property has been flagged in their system for the new round of June recalculations. If they tell you that your home has not been moved yet, you have a golden window of opportunity. You must immediately request a formal review of your property's valuation before they apply the new automatic presumption. When you request a formal review, you force the council to play by the old fair rules. A formal review requires them to actually look at real evidence. They have to look at what similar properties in your specific street have sold for over the last 12 months. In the vast majority of cases, a formal review proves that your house is absolutely fine exactly where it is, and the council will be legally forced to confirm your existing band and leave you alone. But you must request this review before the 28th of June. If you wait until after that date, your request will be thrown into the new system, judged by the new ruthless rules, and your chances of staying in your current cheaper band will evaporate. Now we must look at the second situation. This one is incredibly upsetting because it targets a smaller but highly vulnerable group of older people. This is the deceased co-owner trap. When you originally bought your house, you likely registered it in joint names. It might have been with your husband, your wife, your civil partner, or perhaps a sibling. If that person has since passed away, your property might still be listed at the National Land Registry in both of your names. This is an incredibly common scenario. When a spouse passes away, the grief is overwhelming. You manage to notify the bank, you cancel the phone contract, and you might even tell the local council. But almost no one thinks to hire a solicitor and go through the complex paperwork required to update the Central Land Registry database. The new Treasury rule specifically uses this oversight to extract money from widows and widowers. The council is now allowed to plug directly into the land registry computer. They will look at your official property title. If they see that the house is technically held in joint names, but their local records show that only one person is actually living there and paying the bills, they will flag your account. The government argues that because the official ownership record does not match the reality of who is living in the house, the property must be instantly recalculated. They will automatically add one full band to your council tax assessment. The financial penalty is identical to the mortgage trap. You will be hit with an instant hike of 450 to 600 pounds a year. But this situation is actually much more dangerous for two very specific reasons. First, the penalty is entirely automatic. Once the computer flags the mismatch at the land registry, there is no formal review process allowed. The band goes up, and you just have to pay it. Second, and this is where it becomes truly cruel, some aggressive local councils will look at the fact that the deceased person's share of the house was never formally transferred to you, and they will classify the property as partially unoccupied. They will hit you with an empty property premium. This premium is a brutal punishment that can add a massive 50% surcharge on top of your already inflated council tax bill. They will keep charging you this massive premium for as long as your land registry paperwork remains outdated. You must act immediately if you are in this situation. You have two urgent tasks to complete this week. First, you must ring the official land registry inquiry line. Ask them directly to look up your property and confirm exactly who is listed as the registered owner. If they tell you that the registry was updated when your partner passed away, you can breathe a sigh of relief. You are safe from this specific trap. But if they confirm that your home is still registered in joint names, you must move to the second step without delay. You must apply for an official document called Form DJP. This is the government form used to remove a deceased person from a registered property title. The form itself is completely free to download and submit. You will need to mail a physical copy of your loved one's death certificate along with the completed form. Once the land registry receives your envelope, it typically takes between 3 and 5 weeks for them to process the paperwork. If you cannot find the original death certificate in your files, do not panic. You can order an official replacement copy from the General Register Office for England and Wales. It costs exactly £11, and they usually deliver it to your door within 4 working days. If you actually started this process years ago when your spouse passed away, but you found it too overwhelming and never quite finished it, the Land Registry has a system for that. They keep records of incomplete applications for several years. You can ask them to reopen your old file, which is often much faster than starting completely from scratch. You must understand why this is a race against the clock. The council gains the legal power to hit you with this recalculation the absolute second the new rule goes live, on the 30th of June. If your land registry record still shows joint ownership on that exact day, the council will not call you to ask for an explanation. They will simply trigger the massive tax increase. If you submit Form DJP right now, the system will show that an update is pending, and this legally prevents the council from applying the automatic tax hike. Before we move on to the final trigger, the special exemption you can claim, and the exact script you need to use on the phone, I want to remind you that your support is crucial. If you have been taking notes and find this breakdown empowering, please take a brief moment to tap the subscribe button, leave a thumbs up, and share this video link to your Facebook timeline or your WhatsApp family groups. Protecting each other through shared knowledge is the only genuine defense we have against these hidden government wealth grabs, so let us work together to spread the word far and wide. Now we arrive at the third situation. This is the trap designed to punish you simply for living in a house that has gone up in value over the decades. I call it the accidental wealth penalty. If the current estimated market value of your property has crossed over the £300,000 mark, the government has painted a target on your back. It does not matter if you bought the house for £20,000 back in the 1970s. It does not matter how much money you actually have in your current account. The new rule allows the council to treat your home as a luxury asset. They will declare that the cheap tax band you were given in 1991 is completely ridiculous compared to what your house would sell for today. The most unfair part of this third trap is how they calculate that £300,000 threshold. The council is not going to send an expert appraiser to inspect your roof, your kitchen, or your garden. Instead, they use a blunt instrument. They use a regional average. The council's computer system simply scrapes data from recent property sales in your postcode. If a few newly renovated houses at the end of your street sold for high prices last year, the computer automatically presumes that your house is worth exactly the same amount. Millions of older people have drifted quietly past this massive financial threshold without ever realizing it, simply because the housing market around them exploded while they were busy living their lives. The financial damage from this trap varies, but it is always severe. If the computer estimates your home is worth between £300,000 and £400,000, the typical forced band move will drain an extra £450 a year from your pension. If the estimate lands between £400,000 and £500,000, you will lose around £600 a year. And if you live in the Southeast, or any area where house prices are historically high, your home might be estimated at over £500,000. In that scenario, you could be brutally shoved up 2 entire tax bands, resulting in a devastating bill increase of up to £2,150. If you even slightly suspect that your home might be worth over £300,000 today, you must investigate immediately. You do not need to hire a professional. You can use free, publicly available online property valuation tools like Zoopla, Rightmove, or the official government property price database. These websites will show you exactly what comparable houses on your street have sold for recently. Within 10 or 15 minutes of clicking around, you will have a very clear picture of what the council's computer thinks your house is worth. If the website shows your home is safely valued at £200,000, you can relax. But if the estimate is hovering near or above that dangerous £300,000 mark, you must call the council tax department immediately. There is a vital hidden shield that you can use to protect yourself from this third trap. It is a special protection that is exclusively available to pensioners. It does not apply to young families or working-age adults. It is called the long residence exemption. If you have lived in your home continuously for more than 15 years, and your only real source of income is the state pension alongside a modest amount of interest from your savings, you are legally entitled to claim this exemption. This powerful legal shield forces the council to permanently lock your council tax band at its current level for the rest of your life, or for as long as you continue to live in that specific property. But there is a catch. The local council will never offer you this exemption voluntarily. They will never send you a letter telling you that you qualify. You have to actively demand it. You must apply for the long residence exemption in writing, and your application must be physically received and logged by the council before the 30th of June. If you miss that date, the automatic computer recalculation will trigger and the exemption becomes entirely useless. Now that you understand the 3 massive traps, we must prepare you for the most important phone call you will make this year. If any of these situations apply to you, or even if you are just feeling anxious and want absolute certainty, you must ring your local council tax department. The correct phone number is printed directly on your most recent paper council tax bill. You will usually find it in the top right-hand corner, sitting right next to the official logo of your local authority. These phone lines are generally open Monday through Friday, starting around 8 or 9 in the morning and closing at 5 in the evening. Before you even think about picking up the telephone receiver, you must physically prepare yourself. Sit down at a quiet table, Have a working pen and a blank piece of paper ready. You need to write down 3 specific pieces of information in large, clear letters so you do not get flustered when the operator answers. First, write down your full legal name exactly as it is printed on the bill. Second, write down your council tax account number, which is a long string of numbers usually found near your address. Third, write down your current council tax band, which is always a single bold letter between A and H. The operator is legally required to ask you for these 3 pieces of information before they can even open your file on their screen. When the operator finally answers the phone, you must take control of the conversation. Do not let them rush you. Speak clearly, firmly, and use these exact words. Say to them, "I am ringing about my council tax band. I have heard that the rules around band recalculations are changing from the end of June. I would like you to confirm the current band on my property, confirm whether my account has been flagged for recalculation under the new rules, and tell me exactly what action I need to take today to maintain my current band." This script is incredibly powerful. It tells the operator that you know exactly what is going on. They will type your details into their system. Within a few moments, they will give you a definitive answer. If they tell you your home has not been flagged, ask them to make a permanent note on your file that you called, and you are entirely safe. If they tell you that your property has been flagged, they will be forced to tell you which of the 3 situations caused it. They will then have to tell you the exact corrective steps to take, whether that is submitting a formal review request or mailing out the long residence exemption application. Demand that they put any required forms in the post to you on that exact same day. Timing your phone call is a strategic necessity. Do not call on a Monday morning. The lines are jammed with angry people complaining about issues that built up over the weekend. Do not call on a Friday afternoon because the staff are tired, watching the clock, and trying to leave for the weekend. The absolute best time to call is on a Tuesday, Wednesday, or Thursday morning, right between 10 o'clock and noon. If you call during this quiet window, your wait time will likely be under 10 minutes. Some councils will try to push you toward their online portal. Ignore it. The online system can take up to 5 working days to generate an automated, useless reply. When you have a human being on the telephone, you can force them to resolve the issue right then and there. Because millions of older people are going to be in a state of panic over the next few weeks, a massive wave of criminals is already mobilizing to steal your money. The scammers know exactly what is happening with the June deadline. They know that pensioner homeowners are sitting at home, nervously expecting some kind of communication about their council tax. This makes you incredibly vulnerable. There are 3 specific, highly sophisticated scams running right now that you must be prepared to defeat. The first is the email scam. You will open your inbox and see an email that looks exactly like it came from your local council. It will feature the correct logo and the right colors. The message will warn you that your council tax band is about to be recalculated, and it will instruct you to click a link to confirm your property details or your banking information. Listen to me very carefully. Local councils absolutely never contact residents about critical council tax matters through unsolicited emails. Every single genuine legal communication regarding your tax band will arrive at your house in a physical envelope through the Royal Mail, printed on official watermarked letterhead. If you get an email like this, do not click on any links. Do not reply to the message. Do not ring the fake phone number listed at the bottom. Hover your computer mouse over the sender's name to reveal their true email address. If it does not end perfectly in .gov.uk, it is a criminal trying to drain your bank account. Forward the fake message to the National Cybersecurity Center at report@phishing.gov.uk and then delete it forever. The second threat is the doorstep scam, and this is the most intimidating one of all. You will hear a loud knock at your front door. A person wearing a high-visibility jacket and holding a clipboard will be standing on your porch. They will confidently tell you that they are an official inspector sent by the local council to evaluate your home for the new council tax recalculation. They will ask to come inside your house to look at your rooms. Do not let them in. Local councils never send unannounced tax inspectors to the homes of pensioners, ever. If this happens to you, do not open the door fully. Do not try to be polite. Do not engage in a conversation, and absolutely ignore whatever fake plastic identification badge they try to push against the glass. Lock your door, walk away, and immediately call the official council phone number printed on your paper bill to report the incident. The council needs to know that criminals are actively walking up and down your street. The third scam is the most dangerous because it uses real information to trick you. The criminal will ring your home telephone. They will sound very professional, claiming to be from your specific local authority's council tax department. To prove they are real, they will recite a council tax account number that sounds incredibly similar to your actual one. They can do this because highly organized criminal gangs have purchased massive amounts of electoral roll data. They know your name, they know your exact address, and they have paired that data with publicly available information about your house to create a terrifyingly convincing script. But there is one fatal flaw in their plan, and it is how you will catch them. Eventually, the caller will tell you that they need to verify your identity before they can stop the tax increase. They will ask you to read out your bank account details or your national insurance number. The genuine council tax department already has all of this information securely locked in their computer system. They will never ever ask you to read your bank details over the phone. The absolute second someone asks for those numbers, you must hang up the receiver instantly. Do not say goodbye, just hang up. The pressure on pensioner homeowners in this country has reached an entirely unprecedented level. The state pension is already stretched to its absolute limits, struggling to cover the exploding costs of basic groceries, winter heating bills, and general survival. To have the Treasury quietly authorize a system that allows local councils to silently extract up to £2,150 from your pocket without a fair physical valuation is nothing short of a national disgrace. But you are no longer in the dark. You now have the exact knowledge, the exact dates, and the exact words required to build a fortress around your money. Do not let the end of June pass you by while hoping for the best. Bureaucracy relies entirely on your silence and your inaction. Take control of the situation today. Make the phone call, demand your formal review, submit your long residence exemption, or update your land registry files. Fight for every single penny of the pension you worked your entire life to earn. Thank you for watching. Stay extremely vigilant over these next crucial weeks, and I will see you in the next video.